Good afternoon, everybody. I'm sitting with a mortgage broker, Iankelevic, and I will let him talk about himself a little bit.
So thank you very much, Jana, for giving me the opportunity to speak with you and to
Pleasure.
speak to the internet about mortgages. I'm currently a mortgage level two mortgage agent with the Sherwood Mortgage Group. I've had my license for just under 20 years. And in 2017, I've started a mortgage investment corporation called King Capital MIC.
Yeah, we're going to
That's
talk about it.
Okay, cool. Which has funded approximately $250 million in mortgages. So got a lot of experience, deal with a lot of lenders, and really hope that we can give some insight into potential buyers looking to get into the real estate market.
So the first question that I have for you, what is the difference between the mortgage broker and going to the bank and working with the
Right.
branch?
So a couple things. As a mortgage broker, I have access to 40 to 45 lenders across the country. We deal with a lot of the major banks. We deal with Scotiabank, TD Bank, Bank of Montreal, Manulife, Laurentian Bank. We also deal with alternate lenders. So we deal like Home Trust and Equitable Bank. And then we deal with the privates, which would be something like King Capital. So essentially, as a mortgage broker, we're a one-stop shop. We provide all the entire breadth of solutions for borrowers. And the most important thing is that we work for you. We work for the borrowers. We got to get the job done. And by coming to us, we don't have a preference for a specific bank, specific product, or a specific lender. We want to do what's best for the borrowers. So when we have that many options available to us, 40 to 50 lenders, we're really able to cater to the borrowers in that sense.
So what is the benefit? You come just only to one person, and the one person is going to be dealing with different financial institutions,
Correct.
finding the correct product that suits your needs.
Correct.
Am I correct?
Correct. So we're not married to a specific bank.
So this way, the person is going to be saving a lot of time instead
Right.
of going from one branch
Correct.
to another, etc.
Exactly.
Excellent. So what is the most common mistake that people are making when they are approaching the purchase of the property?
So the most important thing, I believe, is to consult with a mortgage professional and a real estate professional at the beginning. We find sometimes that individuals are not prepared. So by speaking to a real estate professional and a mortgage professional at the beginning of the process, we're able to then set the expectations of what kind of documents will be required, what kind of rates they can expect, what are the payments that they're going to expect when they get into those mortgages. So it's really important that you speak to us sooner than later in the process.
How important is the credit score?
So credit scores are quite important. The key is that credit is one of the pillars of approval, along with income and down payment. But the credit score is a really good starting point. Like even if you've got tremendous amount of income, but your credit is poor, unfortunately, a lot of banks have minimum beacon score requirements, and that would essentially price you out of those mortgages.
I see. And since you mentioned the down payment, what is a typical down payment? What do you expect from the purchaser?
Right. So, for example, in Canada, you can purchase a property with 5% down. The purchase price is under 500,000. The typical that we see, though, is because we're living in the GTA. Usually, it's about 20% is more or less. Now, there are programs for borrowers that have not been able to accumulate 20% and have a less down payment. So we're able to secure those mortgages. So if you've got less than 20% and you're purchasing below 1.5, we can definitely look at options for getting you financing.
So does the 5% down payment still exist?
It does for only purchases that are under 500,000 at the moment. So if you're buying a condo for 500,000 and you want to purchase with 5%, the minimum down payment would be.
And what is going to be the amortization period then?
So great news. On December the 14th, the government of Canada went ahead and changed and amended the mortgage rules. So as such, if you're considered a first-time home buyer, you can actually amortize your mortgage now over 30 years, which has really helped the affordability.
Excellent news.
Yeah, great news. And also, they've also increased the minimum purchase price from $1 million to $1.5 million. So that's allowed borrowers that were traditionally priced out because of down payment ineligible for purchase. Now they're able to purchase those properties that are under 1.5 million with less than 20% down.
Wonderful news.
Yeah.
Wonderful news. Can you tell us a little bit how the process of obtaining the mortgage for self-employed individuals is different from the full-time?
So self-employed individuals, as we know from experience, sometimes they don't always declare the amount of income, and it's stated income programs.
Mm-hmm.
So really for self-employed, there are fantastic stated income programs
Mm-hmm.
that are offered through CMHC and through alternate lenders if they're not declaring all their income, because they've got a lot of write-offs as a sole proprietor, as an incorporated individual, as an incorporated entity. So the key is to work with the mortgage broker sooner than later in the process, because
Mm-hmm.
we're going to need a lot of documentation. We'll need like T1 generals, we'll need notice of assessments, we'll need to see your business bank statements, sometimes T4As. So the sooner you get us involved, the more comprehensive we can be in our review to be
Mm-hmm.
able to guide you. But there are fantastic business for sale programs out there that we've been successful in securing.
So, in average, how long do you think the process of obtaining all the information necessary to get the mortgage?
Right.
How long does it take? 2 months, 3 months, 6 months?
So I'm not going to put the onus exclusively on us. It depends on how quickly we get the information from
Oh,
the
that
borrower.
that's
So as long as the borrower is cooperating and gives us the information, we can usually turn it around in about 48 hours to have a good picture of what is the feasibility of being able to secure a self-employed
when we were
mortgage.
talking about 5% down payment. I
Mhm.
forgot to ask you, how risky is it to buy the property with 5% down?
So when you're purchasing with 5% down, obviously there is a CMHC premium that gets added to the mortgage.
Mm-hmm.
So when all is said and done, there isn't that much equity in the property at that
Mm-hmm.
moment. But as we know, real estate's been increasing at a certain clip over the past 20 years, and it's always a very good investment, especially if you're already spending money on renting. So what I try to advise borrowers is that it's in the long run. It's getting you into the market today. It might not be perfect, but at least you're able to get into the market and start building equity in your respective properties.
Was there any change in the CMHC charges?
Only if you're doing a 30-year amortization, there's a slight premium increase, but it's not very noticeable. It would be, I think it would be approximately 0.25 of percentage. So there is a slight premium for a 30-year amortization if that's the route that you want to pursue.
Is there a benefit of obtaining interest-only mortgage?
So an interest-only mortgage would really be a mortgage like a home equity secured line of credit, or it would be a private mortgage. My opinion is there is no benefit of that, essentially because those generally come with higher rates. If you've got a lot of equity, then you would be eligible for a line of credit. So the average borrower sometimes puts 20% down, so they wouldn't be eligible for a line of credit product off the bat. They'd have to have a combination of a line of credit and a mortgage.
Mm-hmm.
But the interest only component would be for a line of credit. And as long as you're disciplined and you're able to make lump sum payments, then it's great. But if you're not that disciplined and it's tight for cash flow, then it's something you should be considering is getting a mortgage, because there's a forced payment and there's a forced pay down of the mortgage.
And in today's days, with so many changes into the interest rate,
Mm-hmm.
which mortgage would you recommend? Fixed rate or
Right.
variable?
So that's the $1,000,000 question that we oftentimes get.
I know.
So my advice is it's not one answer for every borrower. It's important that we have an opportunity to speak to the borrower so we're able to get a gauge and a sense of what their short-term, long-term, and medium-term home ownership goals are. So, if a borrower is buying a property for investment purposes, like a condo or a multi-res or even a home, we might recommend a variable rate mortgage because that is more flexible. If a borrower is a first-time home buyer and they're nervous and they're not sure, because getting into a new home could be a nervous experience, we might advise them to go into a 3-year fixed. So it really depends on the individual, and it depends on the spread as well. So now that rates have come down, the Bank of Canada has lowered rates, we see more borrowers going into the variable rate product as opposed to the 3-year fixed. But the spread is still very small between the two of them. So 5 years, I'm not yet advising borrowers to go 5. I'm still advising them to go 3 or to do a variable rate mortgage. But it is important that we have an opportunity to meet with the borrower so we get a feel for what they really need and their objectives are before we recommend a specific product.
Do you think there will be another cut for the interest rate?
There's a lot of talk about tariffs. As you know from the news right now, the whole Trump tariff discussion has been consumed the media, and there's a lot of unknowns associated with that. The second component is we've got a provincial election on February the 27th, I think, but we're coming up to potentially a federal election as well coming up.
At the end of the year, yeah.
Potentially, right? So there are a lot of variables that come into play. So it's very difficult to predict
Mm-hmm.
what that will do. I mean, lowering the Canadian dollar by cutting rates, you're lowering the Canadian dollar even more. So I think that depending on how the situation plays out, that yeah, we could experience more cuts in 2025. Absolutely, it is possible.
At the beginning of our conversation, you mentioned King Capital. Can you
Yes.
tell us a little bit more about
Sure.
it?
So King Capital is an alternate lender that offers borrowers short-term financing. Let's say, for example, a borrower is looking to purchase a condo unit or a home, and they want to do some renovations. They only need the money for 3 to 6 months. The bank, it's difficult to get qualified. They don't have a lot of confirmed income. King Capital would require minimum down payment of 25%.
Mm-hmm.
We would step in. It is higher rates than it would traditionally be, but it does allow you to get the job done and be able to kind of turn that over and flip it. Let's say a borrower is looking to get some equity out from their home temporarily as well. King Capital offers a variety of different types of solutions for borrowers looking for short-term financing.
Thank you.
Okay.
How is how large is your database?
So, I mean, okay. So I probably funded since inception. I started about 1.5 billion mortgages of dollar value, 1.5
Mm-hmm.
billion in dollars. So I would say we probably got close to 6,000 in our database, maybe 7,000. So I've been lucky. We've had a good run the past 17 years. So we do have quite an extensive database of
But do you
borrowers.
still have space for?
Absolutely,
Okay.
we're always happy to help new clients and new borrowers with their needs, and also if they have any questions too, we always encourage them to reach out to us sooner than later in the process.
Can you repeat again the name of the brokerage and your
Sure,
phone number?
sure. So it's Sherwood Mortgage Group. It's Eric Iankelevic, Sherwood Mortgage Group, level 2 agent. You can call me anytime with any questions at 416-451-5704.
Eric, thank you very much.
Thank you.
Thank you.